Rossari Bio is a stock on our radar right now. It was a decent quarterly performance for the company, mid-teen sort of revenue growth and EBITDA growth, and especially after what we saw in the first quarter, which was a muted performance. We have with us Sunil Chari, who is the co-founder and managing director of the company, joining in. Thanks a lot, Mr. Chari, for joining in. Good to see some recovery coming by in the second quarter as compared to how the first quarter was. Now, the question is that, for the first half of this year, your revenues are still about 4% higher. EBITDA is up 6%. This compares to your, guidance of 12 to 13% top-line growth for the year and 14% sort of margins. Do you still hold on to that guidance now that we are standing at the halfway mark?
Yes, so we had given a guidance of 10 to 12% growth in revenues, and we still hold on to that. You would also appreciate that the raw material prices have fallen compared to last year and the year before, and the finished goods prices also are lesser than what we were. But quantitatively, we have done very high. Our subsidiaries, Unitop, is nearing 100% utilization. Trashstar is nearing, 90 to 100% utilization in the last quarter. So we also taken up for expansion, and that portrays, something good for the future.
Okay. Mr. Chari, just wanted to come to a few segments. For example, the animal health segment is down around 32%. It's under pressure. What is the reason for it, and what can you guide the street? The reason I ask is that there's a lot of focus on animal health within other segments. A lot of companies are getting orders within the animal health space, and that seems to be an emerging segment of growth for a couple of companies. So could you just explain to us what is the situation with your company and the growth prospects going forward?
Animal health and nutrition is, one of the focus areas for us growth. We see very good upside in the future for our growth in animal health and nutrition. Last quarter, we had double Shravan. We had 2 months of Shravan, and our major sales is into the poultry industry. And hence, the recovery and consequently sales were affected. And that is why we did not, push for higher sales. But if you see our HPPC division, which is the largest division, did amazingly well. We have our highest sales, highest EBITDA, highest sales of HPPC ever in our lifetime histories.
Mr. Chari, just one clarification. You said that you hold on to the FY24 revenue guidance of 10 to 12%, right?
Yes.
But I think earlier the guidance was 12 to 14%. So is it fair to say that you've brought it down?
No, I think it was 10 to 12. I think we had given 10 to 12%.
Okay.
EBITDA would be, higher growth than the revenues. That is what we had planned.
Okay. I just wanted that clarification. So holding on to 10 to 12%. Can you tell us what is the outlook as far as the exports are concerned? About 20% of your turnover comes from exports. Can you tell us what is the expectation as we move along in the second half of the year?
Yeah, so last quarter we did about 105 crores, and before that we did about 85 to 90 crores. So in all, we have done about 190 crores of export. We see, good upsides for exports, especially in the Americas, the North America, South America, and Latin America. That is, a focus area for growth. Europe is also picking up, but it all depends on the war clouds which are there in Israel and Palestine, and also the China, subcontinent.
Got it. One of the big triggers for you would be the expansion that you would do in your Dahej facility. And also you did say that Unitop is at 100% utilization. You have a 128 crore capex plan out there as well. So this 50 crore and 128 crore entire capex plan that you have, by when does all of that come on stream? What is the likely revenue from that business, and how do you fund it?
It is about 18 months. We expect the entire capex to be used up. We will go in phases. We have been conservative with our capex. Since IPO, we have not done any capex except for the inorganic acquisitions which we did. And we are also very conservative looking at, what is up on the political scene of the world. So we go one step by one step and climb it. From this 180 crores, we expect, revenues of nearly 400 crores which is there and higher, because plants will take time to scale up one by one. We see the unit of one, becoming faster because we need the expansion there the fastest. As you see, when we did our IPO, we were just a 600 crore company, and at 383 crores, 483 crores top line in the last quarter, we are nearly now crossing 1800 crores if we see annually. So we have done in terms of capex, we've been very conservative, and now we think it looks good for us to go into the capex cycle.
Okay, all right, Mr. Chari, we'll leave it on that note and touch base with you later on to understand how exactly the business is developing, and if in case you are facing any terms of any headwinds from the geopolitics as well as the global situation. Thanks very much for joining in and talking to us. So that's Rossari Bio. The stock is down around 2% at this point.